In this video, I'm going to give you my top picks for next week, and I'm going to give you a clear and easy understanding of why I am picking these pairs. But first, I want to talk quickly about the dollar. If you can see the COT report from the dollar, you can see commercials getting more bearish, retail getting more bullish, but open interest continues to increase. And look at this from February, the middle of February, it just continues to increase up. That means more money is going into the USD. And even though commercials are bearish and retail are getting bullish, I am more bullish bias because of the open interest. And if I was looking for a trade, it would be looking for a long. But you can see here that we got rejected from daily supply. We're still in weekly supply. And one thing I don't like about the dollar right now as well, besides the technicals, is we're at an area between 100 and 99 where it's very clear that Donald Trump does not want a strong dollar. And when we come up to these zones in history, we usually get some news that will bring the price down. Now, what I think might happen next week, and I could be totally wrong about this, but I think price is going to continue to go up. We might get some news that will bring price down, but then it will continue to go up. But just with the technicals and with the fundamentals with COT data, I don't have a clear bias. I do think that it is going to continue to go up, but I'm expecting short-term volume spikes to go down. And for that reason, I don't want to touch the dollar for next week. When I see open interest drop in the dollar, there's going to be some huge opportunities. And I really do hope the price continues to go up, because once we see open interest drop in the coming weeks, yes, that will be bring very clear opportunities for the dollar. Now, next, I want to talk about, this is a trade. Actually, I'm going to start here. You watched my analysis last week. This was one of my top picks, Australian dollar, Swiss franc. Now you can see price at the start of the week just went up. At the moment, it's getting rejected from an earlier previous Sunday open. So that's interesting to me, because you can just see after coming down, look how many rejections we've had on the 4-hour time frame. Now, I never want to short this. My plan is wait for demand to come to get broken. But price has just gone up this week. So I'm just monitoring Australian dollar, Swiss franc for the week ahead. Now, the next one, and this is in my watch list, Australian dollar, Japanese yen. Now you can see here, now this was one trade that I nearly took last week. I got an alert. I have an alert here for my fixed value area low, and I got an alert and I was waiting for price to come down, to wait for retracement, and I would have entered. But it never did, so no trade. So I am still keeping this for next week, and I will give you my reasons why. Now, you can see, I will start with the Japanese yen. You can see for COT data, look at this. Look at commercials increasing nearly 20,000 long contracts and big increase in open interest. But there's no money coming into the Japanese yen. So I am bullish bias from a COT standpoint with Japanese yen. And if we go to Australian dollar, you can see we're just getting more bearish, getting extremely bearish, and retail is still bullish, and open interest is starting to increase as well, just a little bit. Now, I talked about this briefly as well last week about the Australian dollar. You can see we have fuel shortages, and that's not going to come like in the next week, but things are actually in a really bad spot in Australia because of what's going on in the world. It's going to affect everyone, but Australia are going to get the brunt of it because, as I said last week, they import all their oil and fuel from Southeast Asia, and Southeast Asia are keeping their fuel for their own countries, which you have to totally understand. But in the coming weeks, we're going to see a huge shortage in Australia. And anyone who's familiar with Australia as well knows that this is the time of the year where for farmers to do planting. When they do planting, they're planting food. So this is going to be a big problem going for the next 6 months to 12 months. What's happening right now? So this isn't just about next week. Like maybe Australian dollar will go up next week. We don't know, but I'm just waiting for technical confirmation. Once I have my technical confirmation, I will get involved in a trade. Now, if anyone wants to go deeper with fundamentals with Australia, I would highly recommend checking out this YouTuber, Scott Guru. I have been watching him for about a month and I find him very interesting. He's a straight shooter, talks straight down the middle. He doesn't have a bias left or right, just talks with facts and logic. So yeah, anyone who wants to get a deeper understanding about what's going on in Australia right now and just fundamental analysis, I would highly recommend checking out his channel. Now, if we go the Australian dollar, Swiss and Japanese yen, this is what I'm looking for next week. Same trade. We have to see a break below, and it has to be a clear break. It can't be just consolidating and just close below the fixed value area low. We have to see a clear break, aggressive volume, and wait for a retracement back, and I will be looking to get involved then. So that is Australian dollar, Japanese yen. Now, if we go to British pound and Australian dollar. Now, I want to talk briefly about the British pound. Now, you can see here for COT data that we have increased our longs. And what I really like about this as well, large speculators, they have been increasing their long positions as well. And you can see retail have been closing their long positions, and you see they're not at bearish extremes yet, but it's for the British pound, it's always great to see the British pound getting to bearish extremes. But we're not at extremes yet. Once we get up to over 10,000, we'll be getting to extremes. Now you can also see open interest has increased. And I want to talk a little bit more about the British pound. If you go into TradingView and you type in seasonality in British futures and look at April, look at the history of April from the year 2000 to the year 2025. We have an 80% bullish reading. Now, I never use this information on its own. It's like, 80%, I have to buy the British pound now. It doesn't work like that. But with the COT data, you can see commercials getting long, retail getting bearish, and you can see large speculators have been increasing their long positions. So with that, I take that information very serious. And I wanted to dig deeper as well. Why? Why does price normally go up in April? And anyone who doesn't use ChatGPT, I would highly recommend it because, yeah, it has been very, very beneficial for just getting extra information. Now, why GBP is often bullish in April? New financial year, UK starts in April. UK tax year resets April 6. Funds, companies, institutions relocate money, reinvest capital. This often creates buying flow into GBP. End of year distortions disappear. March, messy flows. Yeah, well, we have seen last month. Tax selling, positioning. April, clean slate. So market returns to true direction, often results in GBP strength. And investment inflows. Pension funds, asset managers start new positions for the year. GBP gets steady inflow demand. But As I said, this is just an extra confluence. My major confluence is what are the big players doing. And you can see that commercials have been increasing their long positions here. Now for GBP, I'm going to go to the daily time frame first. I did a full analysis of this last week. So if you haven't seen my top to down analysis, please check it out. But if you can see here, we have daily demand here, and I wanted price to come down. We never made it back down here. I was looking, we had this intraday downtrend. I will go to the 4-hour now. But you can just see, I just want to check, you can see this clear structure here. Look at this. We're in weekly demand. We're in that big downtrend. We get this rejection. You can see price broke structure to the upside. And now we have a new daily demand created. But what I would love to happen is price to test this demand. You see a clear rejection. And yes, I will be interested in taking long positions all the way up. But price would have to tap into demand yet. And there's no guarantee that will happen. And last week, I was looking and it looked like price was going up. I actually had my fixed range up here. And I was looking for a trade here if we broke above our range. Never happened. Didn't get confirmation. So I stayed out of it. Simple as that. I had no trades last week because I am waiting for price to come to where I want it. I will never force, I will hardly ever force any trades, and I will stick to my plan. Now, so that is daily demand, which I would love price to tap into. Now you have to remember as well, for retail, look at this. Retail at bearish, and you can see commercials getting long. Now, just taking this for example, retail, and we're retail, we're little fish. Commercials, they're the big players, they're the sharks. But what would you rather do? Would you rather swim behind the shark and just follow the shark? Or would you prefer just to swim out in the open ocean by yourself? Which one do you think is better? Because for me, I want to swim behind the sharks. So that's why I wait for these extra confirmation. And even though it's a lot of waiting, when it comes past, it is golden and it have high probability setups. That's why I'm confident to share these setups on my YouTube channel. That is what I'm looking for, GBP and Australian dollar. Touchdown to daily demand is my preferred option. If price comes up and we see a break, and if I see a CME or a CERC pattern forming, I might look for continuation day trade, but we have to see an intraday uptrend first. At the moment, we don't have it. We have to see price coming up like this first. And this 4-hour supply is my point of interest. So that is what I'm looking for with GBP and Australian dollar. Now, if we go next, I will show you. I will go to monthly time frame. I have one more pick. It's actually my top pick for this week. I showed you Australian dollar. Now, showed you Australian dollar, and the last one I am going to show you is euro and Canadian dollar. I will explain now why I am looking at this. Now, first, let's go to the COT data. Now, if we go to the COT data, and I will start with the euro. Now, the euro is not a bearish extreme. I want to make that clear straight away. We have been closing a lot of long positions, and the commercials, they actually increased their short positions, but they've been increasing their long positions more. And large speculators is interesting as well. And you can see they are pretty much nearly neutral. So that is interesting. And open interest continues to increase. Now, a lot of the euro is tied to the dollar as well. And I told you I am expecting the dollar to continue to go up, even though I'm not trading it next week. I am bullish bias with the dollar. So if the dollar goes up, that generally means that the euro will go down. And I want to talk about Canadian dollar. Now, you can see here with the Canadian dollar and commercials, nearly over 41,000 long positions opened. And yeah, a few, about 5,000 short positions, but look at that increase and a huge increase in open interest. So that is information that I take very seriously, but I want to see if technicals align. And looking at Canadian dollar, euro, it became very, very interesting when I looked at the technicals. One thing you have to take into consideration with the euro and Canadian dollar as well is oil. Now, I just want to talk briefly about this. I went back to ChatGPT. Look, you have to look at the correlation with oil per euro CAD. Now, you know that oil prices are going through the roof right now, and it's possible that prices will continue to rise. Now, if oil prices continue to rise due to geopolitical tensions, supply disruptions, or strong demand, Canadian dollar strengthens, so euro CAD falls, pair weakens. Now, this is common. This doesn't happen every time. This is just an extra confluence. But you see oil prices fall, then Canadian dollar weakens, and euro CAD strengthens. Because Canadian dollar in Canada, they are a huge export of oil, and euro, they're a huge import of oil. So rising prices is not good for euro, and it's great for Canadian economy. So guys, if you like this information that I'm sharing with you, can you please like and subscribe this video? I would greatly appreciate it. If I know people are finding value from this, I will continue to do these videos for sure. Now, if we go to the euro CAD, I have my fundamental bias, and you can see here, I'm starting at a monthly time frame. Now, what I find interesting here is you can see here you have this monthly support and resistance. Now you can see here we closed below in March and we went. Look how much price went down, and we came back up. But you can see we're getting rejected. But this support, this was support from December, January, February. Now it's turned into resistance. But that's one confluence from a technical standpoint. But once we go to the weekly time frame, and this is what I love to see, and these are my favorite kind of supply and demand zones for the higher time frame. We see this consolidation for numerous weeks. That sharp, you can see that sharp downside, like with volume for 1 week in the start of March, and we're coming back now again. So look at this, with monthly support getting rejected, and we're getting rejected from weekly supply. And if we go to daily supply, I'll show you something that I found very interesting. Now, anyone who's familiar with how I trade, you know that one of my favorite trades is this pattern. Now, what is this pattern? I'll explain in a minute. Right here, we have the consolidation. This is on daily time frame. This is consolidation. And I have my fixed POC right here. You can see price got rejected. Now, what we normally see when I'm looking for entry, consolidation. Well done. Okay. So what we normally see is consolidation, expansion. Why is this not going down? Okay. I don't know why this is not going down. I'll try one more time, but it's just not doing it for me. Okay. Let's try one more time. Okay. Consolidation, expansion, retracement, and I don't know why this is not working. But you get the idea. What I want, retracement. I am looking for price. I'm just going to show one arrow. Okay. One arrow here. We're looking for continuation right here. But this is not like the lower time frame where I'm going to enter blindly. Absolutely not. You have to remember we're on the higher time frame. So this is just one interesting thing I wanted to show you. And one moment here. What I have marked out here is you can see we have 2 daily demand zones that I find. Why is no, yeah. Okay. Now, okay. We have daily demand here, and we also have daily demand right here. Now, this hasn't been tested yet, but this is a key level of interest, what I am looking at. So we can see here on the daily time frame, we broke down, we retraced back. We're getting rejected from monthly support and resistance, weekly supply, and clear rejection from that fixed POC, from that consolidation. So sellers are clearly defending this area. Now, if we go to the 4-hour time frame, you can see here what I'm looking at, and this is my favorite setup actually for the next coming weeks. This mightn't happen next week. This might take time, and that is totally fine. We can see this consolidation right here before where this demand was created. We have this fixed value area low. What I am looking for, and this is my preferred choice, what would happen, price to break this aggressively, break this demand. We have to see a closure below here. We see a retracement back here, and yes, I will be looking, and I will be looking to hold this to the next daily demand. So this is a swing trade that I am hoping plays out, and it might take time. This might happen next week. It could happen the week after. It could happen in 2 weeks. Last week I didn't trade. I mark out scenarios on the weekend, and I wait for price to come to me. And as I showed with, I have this for my Australian dollar and Japanese yen. I haven't updated the other one. I have alert cert. And once I get an alert, I go to chart and I monitor a price then. I obviously look in on price every day, but I have all my work done on the weekend, and I just wait for price to come to me. And that has just made trading just so much easier for me, is having plan marked out and just waiting for confirmation, not forcing any trades. But if there's anyone new to trading and you're just in your first year, I wouldn't recommend doing that. I'd recommend getting your reps, getting used to trading, finding your edge. I wouldn't even worry too much about this. If you are new to trading, I would just worry about getting your technical analysis, sharpening your technical analysis, because you need to get those reps in. And after that, you can develop fundamentals with your technical analysis, and that is when you will seriously level up. No doubt in my mind. But that is my trades I am looking at for next week, and the EuroCAD is my top pick because of this. If we don't see a retracement back, if price comes here, there's still some short opportunities for sure. CME or CRC patterns that I see forming. I would be looking for a trade, but I would love if price came back up here and see a clear rejection. Clear rejection on the 4-hour time frame, if I was looking to take this down to daily demand. That is my setup for EuroCAD. That's my top pick for next week. Australian dollar, Japanese yen, I'm very interested as well. If we break this daily demand, and you can see price similar to EuroCAD, it's just shorter, so it would be a quicker trade for sure. And GBP and odd, my preferred choice is price to come down to this demand, because there's going to be much better opportunities for price to go back up. Might I look for a trade if I see an intraday uptrend forming here? Yes, if I see a clear opportunity for a day trade, I will take it. My preferred choice is going down to this demand. And one more thing I want to talk to you about. Next week, we don't have a lot of high impact news, which is good. I have marked out all the currencies I'm looking at. And we have a lot for USD. PMI for Canadian dollar on Tuesday, and Japanese yen consumer confidence on Thursday, and Canadian unemployment. That's the highest, the highest impact news. We have a few other small ones, and like Star, but nothing hugely significant next week. So yeah, I do like that. I like when there isn't a lot of high impact news. So hopefully it will lead to smooth sailing. And that is it for this week, Jays. And I am not going to be able to do these videos for a couple of weeks. I'm going to be doing a lot of traveling. So the setups I gave today, these mightn't play out. This might happen in 2 weeks or 3 weeks. It mightn't happen. It mightn't happen next week. This could happen in the next couple of weeks as well. I have scenarios mapped out. I will continue to look. I will continue to look at COT data on the weekend, and I will be able to trade most of the time. I just won't have time to do video or YouTube content because I'll be doing a lot of traveling for the next few weeks. But I will be back again in a couple of weeks, and yeah, best of luck with any trades that you guys are doing. Have a great trading week.